Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast, The Week That Was. Indian assets witnessed sharp volatility over the past week. Global equities resumed positive momentum with major developed and emerging market indices posting gains. The MSCI World and MSCI Emerging Market Indices were up 2.2% and 1.4% respectively over the past week. Major US benchmark indices rallied as investors cheered the weak consumer spending data and less than expected weakness in US economic growth in the fourth quarter of 2022. All three major US benchmark indices posted gains for the week, with the S&P 500 index up 2.5%, while the Dow Jones and Nasdaq index up 1.8% and 4.3% respectively. Back home, Indian equities consolidated over the past week amid cautious investor positioning ahead of the union budget, foreign investor selling, and adverse media coverage of a large domestic conglomerate during the week. The Nifty index was down 2.3% over the holiday truncated week. Broader markets underperformed Nifty, with the Nifty Mid-Cap Index and Small-Cap Index down 2.8% and 3.4% for the week respectively. Among sectors, autos, FMCG and IT remained resilient, recording positive gains over the week, while bank, telecom, energy and utilities were the worst performing sectors with cuts of over 5% during the week. The Indian fixed income market remained under pressure from the start of the week. Bond yields edged higher across the curve amid rising US bond yields and weak investor demand ahead of the union budget, as reflected in the muted bidding and higher cutoff yields at the RBI's weekly debt auction for INR 300 billion. For the week, the 10-year Indian government bond yield rose by 4 bips to 7.39%, while the 3-year and 5-year Indian government bond yields rose 10 bips and 4 bips respectively. The INR depreciated over the week amid higher US bond yields, rising crude oil prices, sell-off in domestic equities and foreign investor outflows. For the week, the INR fell 0.5% to close at 81.5 per dollar. Among other updates during the week, as per the RBI's Bulletin Weekly Supplement, for the week ended 20th January 2023, India's FX reserve rose to USD 573 billion, up USD 1.7 billion during the week. Overall banking system credit stood at INR 33 trillion, up 16.5% year-on-year. Deposits stood at INR 177 trillion, up 10.6% year-on-year. And the M3 measure of money supply stood at INR 218 trillion, up 9.1% year-on-year. Over the coming week, all eyes will be on the monetary policy outcomes of the US Fed and European Central Bank's policy meeting. Consensus expects European Central Bank to raise policy rates by 50 basis points, while the US Fed is expected to lower the quantum of policy rate hikes to 25 basis points from 50 basis points earlier. Market participants will be keenly watching for the US Fed's guidance on future monetary policy actions and its assessment of the persistence of inflation trajectory. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.